Welcome back, ladies and gentlemen. Please continue with your main course if you're still going with that, but we do need to press on and get into the next part of our lunch event this afternoon. Just before I invite our panel up to the stage, just a quick mention and a special anniversary to acknowledge this year. Mindsight Annual, this fantastic publication, is turning 20 this year. This is a collaboration between the WA Mining Club and Platform Publications. It's a fantastic publication that's for and about the state's mining industry, celebrating its people and its diversity from the big global players right through to the startups and the suppliers. If you are interested in advertising in the special 20-year anniversary edition, they are now open for your inquiries. And if you would like to inquire, we've again made it easy for you, I hope, and put a QR code on the screen if you would like to continue a conversation around that. Click on the QR code, or better still, we have Peter Mizzen from Platform, who's down on table 13. Pete, stand up. There he is. Thank you, Pete. If you want to chat to him about Mindsight, he is the Mindsight Sponsorship Manager. So thank you very much, Pete, and looking forward to the 20-year anniversary edition. Before we invite our panel up to stage, just a quick refresher about Slido. If you haven't used it before, again, the QR code there will take you straight through to the session that we're about to get underway. If you want to go the traditional way, slido.com, S-L-I-D-O.com, no AU, and the code you need is 24FEB, and that'll allow you to put some questions to the panel, and time permitting, they'll get to some of those throughout their discussion. Okay, so today's discussion, there's a lot to get through, isn't there? Commodity markets last year were like an absolute roller coaster. Serious market G-forces from all the gyration, leaving us really not knowing which way was up and which way was down. Lithium was going great guns until it wasn't. Gold didn't, and then it did, finishing the year in record territory. Base metals wobbled when arguably they should have firmed. Nickel, in particular, fell victim to non-ESG friendly Asian production. Iron ore rose and then fell on some shadowy news out of China. Critical and strategic metals emerged as markets of growing importance. Energy metals swung wildly based on the climate policies of the political stripe of the day. Uranium started to emerge as a firming future, and then the death of coal and gas was badly misjudged as well. All against the backdrop of skirmishes around the world, international supply chain disruptions and interest rates, fuel, power costs, inflationary pressures, you name it. It seems like we had it all. So we're going to gaze into the crystal ball now for 2024 and try to figure out what is in store over the next 12 months or so. So I'm going to invite Liam Twigger, who's going to moderate and contribute to the discussion this afternoon. Liam is the Deputy Chair at Argonaut, and he's going to introduce our panellists as well. So this is our Market Outlook 2024. And Liam very bravely has agreed he's going to do 10 push-ups every time the words nickel and Indonesia come up in the discussion this afternoon. So Liam's going to be absolutely knackered by the end of this afternoon, I reckon, but what a brave sport he is. So Liam, over to you.
Ladies and gentlemen, can you hear me? Yeah, it's great to be here. Today's the 29th of February. So we're going to have 366 days this year. So it's a leap year, and that means actually you're not getting paid for today. So we're actually, this is a day you're not getting paid. And KPMG have actually said today that today will add $6.6 billion to the Australian economy. So, and save us potentially from entering a recession. So thank you for your contribution, for coming to the Mining Club lunch and making your contribution to stopping Australia tipping into a recession. Now, I'd like to introduce each of the panel members, and the first one is Courtney Libby. So as you come up, I'll read a profile. So Courtney works at Canaccord Genuity in the investment banking team and has a sector focus on natural resources. Prior to moving back to Perth last year, she spent a year working in Canaccord's natural resources banking team in Toronto and also worked in the Melbourne office. She was previously a corporate lawyer specialising in M&A and equity capital markets at a top Australian law firm. Courtney holds a Bachelor of Laws and a Bachelor of Science from the University of Western Australia. Please welcome Courtney. Thank you. And I'd like to make a special shout out to Courtney's mum, Peter Libby, who was awarded the Member of the Order of Australia for significant service to mining and the natural resources industry and to the community. So please stand up, Peter. Woo! Beautiful, beautiful. Our next panel guest is Ed Ainscough. He's the London Metals Managing Director. Edmund Ainscough has over 35 years' experience in the resources industry. He arrived in Australia in 1987, heading straight to Kambalda, where he spent 12 months in WMC's underground Victory Gold Mine before heading to Zambia to work underground in copper, followed by tin in Cornwall and a stint exploring for gold on the west coast of New Zealand. Returning to Kambalda in 1994, Ed says he sometimes feels like he's been there ever since. He was the last chief geologist for Western Mining at St Ives and the first for Goldfields when they bought the mine in 2001, which is when the seeds of the London Metals story were sown. Ed stayed with Goldfields until 2008 before a 3-year spell in private advisory, and in 2013 he co-funded the private vehicle that ultimately became London Metals. Please welcome Ed. And our third panellist is Andrew Grove. Andrew is a highly experienced mining and finance executive with extensive global industry experience across multiple commodities. This includes more than 30 years in managerial, technical, commercial and finance experience, including significant expertise in uranium and West African development and operations. Andrew also spent 14 years at Macquarie Bank as Division Director, Mining Finance and Risk Management. He held technical roles at Orano, Areva, Mines and Resources Australia and Acacia Resources. Mr Grove also holds a Master's in Mineral Economics and a Bachelor of Engineering from the WA School of Mines. Please welcome Andrew Grove. So, look, thanks, Tim. And what does 2024 hold for us? Well, I thought I'd set the scene or set the vibe with a quote from well-known or renowned US economist Thomas Galbraith. He said, "The only purpose of economic forecasting is to make astrology look respectable." So let's keep that as the vibe. So with that in mind, if I can just recap the global scene. Right now, we've got conflict from Ukraine to the Middle East and North Africa. We've got China sliding from one economic crisis to the next. We've got central banks around the world keeping interest rates super high, trying to crush inflation and potential economies at the same time. We've got massive uncertainty with the rollout of the energy transition and the consequent impact on commodity prices. And we've also got 4 billion people heading to the polls this year. Half the world's population is going to vote on new governments. So it's a huge amount of risk, but the world economy rolls on. In 2023, this time last year, everyone was expecting a recession, but the world economy grew at 3% last year. And they're forecasting the same this year. It's almost as though the world has normalised chaos. And with Donald Trump likely to head to the White House later on this year, he's probably going to do more damage to NATO than the Russians have done since the Cold War. But as Taylor Swift tells us, we just shake it off. So turning locally, where is the risk capital going to? Is uranium the place to put your money? Is gold back in favour? And what do we do with lithium and nickel? So hopefully our panellists can help us here. And I might go first to Ed with a question. You've certainly been in the trenches over the last couple of months with the nickel price, collapsing equity prices have been collapsed. It caught the industry and the majors by surprise. But, what have we learnt from this? And is it structural or is it cyclical? What do you think?
Yeah, look, I was fortunate enough to sit in that crisis meeting with Minister King. And certainly the producers seemed quite shocked at the Indonesian production. I would suggest it didn't come out of left field. I think that they haven't hidden. It was in plain sight just how much they were going to produce, at what cost they were going to produce it, and the quantum of that. And I think the majors very much gave, or the producers gave the impression that they were disappointed in the lack of price bifurcation. So it was more to do with the lack of the price response rather than the underlying price itself. So is it structural? I don't know. I take a lot of comfort that if I look back in history, what's happening in Indonesia, building something from nothing, is something that we did in Australia back in the 1960s, speaking to Kambalda, where our assets are. WMC found Kambalda in 1966 and went from nothing to a significant player on the global nickel scene in 2 or 3 short years, in building the concentrator in Kambalda, the refinery in Kwinana, and then the smelter up in Kalgoorlie. So we did it in the past, and we did it with the support of government. We did it quickly, we did it dynamically, and we built nation-building sectors that lasted for 60 years. up until this very recent downturn. So I don't think we should be surprised if other countries have done it. I don't think it's necessarily structural. I think this knee-jerk response we've seen in the last 6 weeks with just bad news, media has driven a capitulation in sentiment, and the markets hate uncertainty, and it's created a huge amount of uncertainty, which has massively impacted on all the nickel companies, but obviously from a personal perspective, it's hit London pretty hard.
Thanks, Ed, and we'll come back to Kambalda and Nickel West's positioning and response. But my next question is to Courtney. But before I ask about the outlook for Canaccord and what you think where the market is going to be from an equity capital markets perspective, I've got to say, to get into corporate finance, normally you've got to be male and come from the western suburbs. So how on earth did you get in? Did you get in under the radar? How did you get into Canaccord and corporate finance?
Well, thanks for having me to the mining club. Probably a lot to do with it as well as my mum, who was mentioned today. She was a bit of a pioneer in the geology space as well, which is usually male dominated. As Liam mentioned, I studied law and geology, so I didn't study finance at all and didn't really know what finance was or that there was a career path there. So really it came down to people who backed me. I was a lawyer for a number of years and a job came up at Canaccord kind of organically. And I was just lucky to have, a boss at the law firm that I was at who really backed me into it. Plus the guys at Canaccord that I'd worked with when I was a lawyer, also backing my ability to learn and pick up those skills that I maybe didn't tick the boxes of. No finance degree, no economic degree, no couple of years experience. So I think it's been really helpful to have the backing of a lot of people to kind of get me here. But yeah, loving it and still learning every day.
Brilliant, and it's great to have you up on the panel, and you're a fabulous role model. So we're absolutely delighted. Can we have a round of applause for Courtney? Now, back to the question. What's the outlook? How are you finding equity capital markets at the moment?
Look, it's no surprise that it's pretty tough, and you can probably guess the commodities that we're seeing interest in. And because I'm in the corporate finance team, really what I see is where the money's flowing, what deals can get up, what we can get done. So yeah, no surprises that uranium on the back of the uranium price doubling. We've done 4 uranium deals so far this year. Just raised 30 mil for Lotus. Also, copper as well. We're seeing a lot of interest in, particularly because there's not a lot of options of pure play copper companies on the ASX at the moment. So we had the Metals Acquisition IPO, which was upsized. We've had Hillgrove started producing copper as well. Plus, of course, the gold as well. We haven't seen so many raises in the space yet, but still a lot of investor interest in it, and that's one that we think will be big this year.
Brilliant. So you mentioned uranium, probably copper, and gold. Gold hangs in there.
Didn't mention lithium or nickel so much for the shorter term. But
No. Well, we'll get to that. Look, thanks, Courtney. And now across to Andrew from the Millionaires Factory. Originally, I was there for a short period of time, but the printing thing wasn't working when I was there. But look, you've landed on your feet. You're at Aura Energy. You've got uranium in Mauritania. I mean, what's your view? I mean, you've only been in the chair 4 weeks now, but what's the outlook for uranium and what's investor interest like?
Oh, look, I think, as Courtney said, uranium's the most loved commodity at the moment on the back of the nearly 100% price increase over the last 12 months. And I think we're seeing a shift globally in terms of acceptance of nuclear power as reliable, cheap baseload power. All the intermittent renewable power systems are driving prices up and unreliability. I was in Sydney about 2 weeks ago, and they had to shut the air conditioning down in the offices because the clouds came over. So, even in Australia, where governments are looking at are facing a decarbonisation of the economy, and they need to deliver cheap power and reliable power, otherwise they get voted out. So they'll do whatever they do to not get voted out. So globally, you're seeing a massive shift back towards nuclear power. We've got 437 nuclear power stations in operation around the world. There's 63 getting built now, another 111 being planned globally. And above that, there's some more longer-term plans. So they're looking at doubling the nuclear power production. Nuclear power produces about 10% of the world's electricity demand, and electricity demand isn't going down. It's forecast to grow by 44% in the next 10 years or 77% over the next 20 years. So it's nice, after running a little small gold company in West Africa, it's nice to get some love from the brokers. Every broker loves you at the moment because it's, for equity markets, it's the commodity that people want to put their money into, and they see continued growth, and where there's a massive supply deficit in uranium and a very large forecast supply deficit, so we should see.
So Andrew, I guess there's a debate in Australia questioning whether or not the uranium industry, has a role here. But do you see it? I mean, internationally, it must have a place on the energy transition.
Yeah, no, it is. All OECD countries have come out and said they're going to double their nuclear power production. Sweden, where we've got another uranium asset, has said we're building 2 new nuclear power stations on top of the 3 we already have. A lot of the power generation growth is in China and India. Sort of about nearly half of that is coming out of China and India. As I said, they're building twice as they're rebuilding again the capacity we've got now in the next 15, 20 years. So there's a strong growth in nuclear power, which reflects in the price of uranium. And given that we've been sitting at sub $30 for 10 years, there's been no exploration, no new mines, no invested capital into the existing operations. It's a big catch-up, and whether they can catch up with that growth is yet to be seen.
Great. Look, thanks, Andrew, and we'll come back to that. Ed, another question for you. What are your thoughts on the news about BHP and their talk about putting the whole Nickel West business on care and maintenance? What's going on?
Yeah, well, I presented at Fremantle a couple of weeks ago on a Thursday morning. I got up, I had my presentation all fixed. The one thing I wasn't worried about was the Kambalda concentrator. I thought, well, we'll definitely we'll have access to it. And then I saw the news and I thought, well, gee, I'm going to have to rewrite my script for the presentation. Number one, I can't believe they'll shut their whole business. I think there's an awful lot of politics going on at the moment, a lot of posturing. I said in Fremantle, and I've said it to investors who've rung up, concerned obviously with the state of the nickel as an investable commodity, that the nickel price in my view is not too bad. In fact, when we listed back in June 2021, it was actually lower than it is today in US and Australian dollar terms. And on the day we listed, we had an enterprise value of 28 million. We found 70,000 nickel tonnes in the meantime at 2.7% in Kambalda, so a high quality future nickel source. And today, I haven't looked at the share price today, but our enterprise value is about 17 million, having been at 170 million late last year. So that tells me that's capitulation. It's not fundamental. It's not price-based. Like I said earlier, it's about the uncertainty of the nickel business. What BHP does is obviously the cards are up in the air. But to remove that uncertainty, we need some guidance. We need some decisions to be made. And I said this publicly in Fremantle, between ourselves and, say, Wyloo, we've got about 300,000 tonnes of nickel in the ground in and around Kambalda at just under 3%. Put that in context, that's what Nova was when it was discovered at a 1% cut-off. It was about 300,000 nickel tonnes at 3.4%. If you found Nova today, it would get built. All right, so this isn't really much about price. It's about the quality of what's being produced, and this uncertainty has created this kind of equity market capitulation. If they do shut it and they try and warehouse it, I mean, I said publicly, if they don't value it, I'll more than happily take it off their hands for $1. Use it or lose it would be my grab, and you might hear me say that publicly a few more times when we find out what they are going to do.
Yeah, well, there are a lot of juniors, I guess, that have resources that that concentrator would make a lot of money for, and to have control over that concentrator, and I think most people would agree it should be use it, lose it, or share it at least to deliver some value into the sector. And it's the other thing is with juniors, you don't have a lot of liquidity, so when people run for the exits, your share price, the drop gets exaggerated. So I'm sure it'll bounce back. Yeah,
look, from the state government's point of view, the metal in the ground obviously belongs to the Crown. That's future income for the state from a royalty stream. They've got a huge amount of working capital, if you want to call it, that's invested in the ground. Places like Kambalda are already heavily disturbed. A significant amount of infrastructure and power, water and utilities, which BHP generally control coming into Kambalda. But the state government, I think, has a part to play in terms of liberating, freeing up in areas that are well-known, well-understood, low risk, that high-grade metal is future income stream for the taxpayers of WA.
Excellent. Courtney, So I guess the IPO market has sort of dried up. I mean, you get the big ones like Metals Acquisition Corp, which has been super successful. But traditionally, we'd have 50 to 100 junior IPOs coming through. That market or window may have closed for the moment, but we're seeing a little more M&A. And we saw a couple of weeks ago Horizon Resources looking at merging with Greenstone. And are you seeing more inquiries on M&A?
Yeah, definitely. I mean, we're also stepping more across into the M&A side, so naturally seeing more. But we think that there's a lot of opportunity at the moment for M&A. Particularly, we're seeing a lot in uranium as well, just in this kind of uranium bull cycle. But then also in gold, as you say, we think we'll see more consolidation around companies that have, resources near mills, which we've already seen. We've already seen that in Genesis acquiring, Kin's, the assets from Kin. Then also, as you mentioned, just because of cost, people are needing to scale up, and so we're seeing a lot. We expect to see more of these kind of mergers just to scale up to be able to get into production as well. Even in lithium at the moment, it's a chance to be counter-cyclical, so we expect to see a lot more M&A in there too. So yeah, definitely.
Great. Well, fingers crossed, and here's the opportunity, to consolidate and get critical mass and get market support. Back to you, Andrew. Looking at the approval process, if you were lucky enough to get a uranium mine in principle up in Australia, I mean, what's the approval process runway compared with, say, West Africa?
Well,
what's your runway there?
Well, in Australia there isn't one, especially in WA, which is nice because you've locked up the world's biggest resources of uranium, so this means the price is going to go up for the rest of us.
The biggest resources in the world sitting in WA?
In Australia. Australia has the biggest resources of uranium in the world. And in reality, we have a very small production profile, and there's probably not going to be too many WA ones in the current legislative environment. We work in West Africa. It's a poorer country. They really want development. They want foreign investment and want capital. We got our mining licence 4 years ago. We got our exploitation permit 4 years ago. We got our mining licence at the beginning of last year. So we're basically permitted to go. We haven't sort of progressed it as fast as we could have because of the uranium price, but now the uranium prices are supporting us to go for development. We put a feed study out actually yesterday that shows it's a robust, economic scale, long life uranium producer. We'll produce 2 million pounds a year for 17 years. There's lots of exploration opportunity to find more immediately adjacent to the mineralisation, and we're positioning ourselves as a strategic footprint over an underexplored uranium area. So the government's really pushing us to get going, and so we're done. We're ready to go. Next step's financing, obviously. But you go to these West African jurisdictions, and they're very supportive of foreign invested capital to develop industry and create jobs. Whereas the first world's a little bit more got a lot more legislation, green and red tape to get in your way, I think.
Got it. So I guess there's still a market for gold, and Ed, as a junior, you've got to be quick on your feet and nimble. Nickel's off the boil at the moment. Do you have any gold?
Yeah, who said nickel? I can see the guys at the Goldfields table. Goldfields been a great major shareholder for us. Goldfields, as you said in the introduction, I was the last chief geologist for gold at Kambalda for St Ives, and I can see Sheila Dunlop sitting there, who was with me at the time. And Goldfields dramatically ramped up the exploration budget and been hugely successful. St Ives is one of Australia's great gold camps. If the Australian assets inside Goldfields were in an ASX listed company, it would be one of Australia's great listed gold companies. And we're very blessed to have 23 square kilometres right in the middle of all of that between two great gold camps. So yes, we had a natural hiatus in our drilling, and as you said, nickel's a bit on the nose. I was actually expecting to be uninvited from this event when people saw that I was at a nickel company, and we are turning our mind to doing a little bit of gold drilling. Like I say, we've got 7 million ounces sitting right around us, right in the middle of St Ives, so it would be opportune to have a quick look at that, certainly.
Got it. So Courtney, someone walks through your door and they're looking to raise money. What are the three things you look at? If it's an IPO or a capital raise, what are the things you're looking for at the moment? The three things, say.
So we'll probably talk to everyone, but in terms of, there's obviously a lot of different things that we'll look at. The three kind of main ones are the asset quality itself, which is kind of the obvious one. You have the long life, low cost assets, but they're rare and they only come around, every 5 to 10 years. So looking at, more strategic assets as well, some of the commodities that we've mentioned up on the panel today, whether there's a partner in there who's kind of giving that technical tick of approval to assets. The other thing that we look at is a high quality management team, and these things that I'm mentioning, you've probably seen everyone's investor presentations up the front as well. So there's the management team that people will back with their eyes closed. No matter what company they're at, people will put their money in and follow them. But outside of that, it's looking for the range of experience, capital markets, technical, but also we like to look at how much management owns in the company as well, particularly for an IPO. So we want to see a bit of skin in the game. We like to see what their incentive structures are, what that's all based off. And then the third thing is probably jurisdiction. And that really goes to whether an asset can achieve full value or not. So, if you have 3 million ounces, a 3 million ounce gold project sitting in Africa, it may not achieve the same value as, the same project sitting out in Kalgoorlie. And that also, the jurisdiction also goes to whether the chances of, an asset getting up and going through the regulatory process as well. So historically, investors in Australia have, put their money into African assets, and that's been something that we've been more familiar with. But we've seen a lot more recently South American assets and, Central American, Latin America assets coming through. And as we see more companies, getting into production through South America, we think that that's a jurisdiction as well that we'll see more happening in.
I've said this a few times now, but the ASX has taken a global leadership position in terms of raising capital. In the 10 years ago, it was always Canada, and the Toronto Stock Exchange was the big one, and we'd have some follow-on here. But for the last 5 years, we've raised more money, and you're getting Canadians coming to Australia, and now projects in South America are getting a good hearing on.
Yeah, for a while there, every other week we were getting requests from TSXV listed companies looking to dual list or IPO on the ASX. So yeah, a lot of those Canadian companies looking to move down under, which we just saw with Metals Acquisition and Capstone Copper as well. So yeah, it's definitely something people are looking to do.
You can see with something like Metals Acquisition Corp, Australian management team we all know, and the projects here. I guess if you've got overseas companies coming to list, tap into our capital markets, but we don't know the management team, it's a little harder. Have you got any thoughts on why the ASX has been so successful over the last 5 years?
Yeah, I think a lot of people are seeing a bit of a valuation upside on the ASX. Companies like with rare earth assets or lithium assets, they're seeing the valuations on the ASX a lot higher for that. So even TSXV listed companies with rare earth assets in Canada are looking to come down to the ASX when we don't know the management teams, we don't know the assets. So yeah, there's a big push for them to try and get that valuation upside, which, as we know, doesn't always happen.
Got it. So look, when I started the talk this afternoon, I talked a little bit about astrology and a bit of fun and who really knows where the market's going to end up. But Ed, you've got a fascinating and quite an entertaining gold story, and
yes.
Which just for fun, just to share it with you, it's really interesting.
Well, I've just looked around the room. There's only about 3 or 4 people who know my wife, so as long as the rest promise I don't tell her. You mentioned astrology at the start, but my wife was a very good female sports person in New Zealand. She's a Kiwi, played provincial rugby, softball and netball for Canterbury. And she went back when we were living in Kambalda, she went back and she bumped into an old provincial netball player that she played with, and this lady said, I knew I was going to see you because my clairvoyant told me I was going to bump into you today. And I told the clairvoyant, that's rubbish. Donna lives somewhere in Australia, works in the mining industry with her husband. I haven't seen her for 20 years. Anyway, Donna rings me up and she says, look, I'm going to go and see this clairvoyant. That was pretty amazing. And I said, don't go and see them, they're rubbish. Like, you just wasted your time. She said, no, I'm going to go and see them. And I said, well, don't answer any open-ended questions, just yes, no. Rang back the next day and I said, how did it go? And she said, you were right, it's all rubbish. And I said, come on, tell me. You said you were going to go. You can at least tell me, why do you think it was rubbish? And she said, well, this clairvoyant said you were working in the marine industry. And obviously that's rubbish because we're living in Kambalda. And she just kept going on and on and on and on. That not only did you work in the marine industry, but you were surrounded by ships that all had very, very old names. And of course I went quiet, and I'm sure the Goldfields table will know that all the ore bodies in Kambalda are named after ships in Nelson's fleet. So I'm heading over to Melbourne, and this will make Sheila Dunlop laugh, with Richard Laufman to present to Don Morley and Hugh Morgan. And I told Richard, I'm going to tell the guys that my exploration plan is based on what the clairvoyant told me. And Richard Laufman said, if you do that, I will seriously sort you out. And anyway, I didn't think I parked all that. And then years later, fast forward kind of 20 years later, we found Baker. And if those of you saw me present at Diggers a couple of years ago, one of the drill holes was 24 metres at 6.8%. You'd never guess it with an enterprise value of $17 million. And it was literally 15 metres of gold. And the other thing the clairvoyant said, that she said she saw your husband standing next to this golden waterfall surrounded by ships with old names. And I thought, you beauty, we're going to be hugely successful. And we were up until this last 8 weeks. So, so the clairvoyant was right, but she didn't tell me it was time-based.
It's a great story. And there's still time. There's
Yes.
still time. It's not done yet.
True.
I'm just looking at some questions from the floor, pardon me. There's one which is a bit controversial, which I'll read out, but I think we might answer after. But I knew someone would ask it. It says, based on Andrew Forrest's comments at the Australian Press Club, what are your thoughts on us betraying the bush by supporting nuclear energy over renewables? And yeah, thanks for that question, but maybe if you see us afterwards rather than...
I'll pass.
Yeah. No, don't blame you. No, Andrew's got deeper pockets than all of us put together many times over. And what will be the commodity of 2024? So starting with you, Andrew, what do you think?
It'll have to be uranium, wouldn't it?
Of course it would, yeah. Ed?
I'll take the clairvoyance route, and I'll pass on that. I'd love it to be nickel, but who knows? It can't stay down for as long as where it is at the moment.
I'd say uranium and also add in probably gold. So, yeah, the two of them.
Yeah, brilliant. Well, here's hoping. And will lithium rebound? Is that a structural thing, or what do you think?
Yeah, well, we believe it will. We see these, the tough times at the moment just a shorter term thing, and we believe in the EV thematic, so that mid to longer term, we still believe there will be a turnaround, and it just gives a chance, as I said before, for people to be counter-cyclical at the moment, but all the supply-demand thematics, they all still stack up.
Okay, and I've just got one question. Very little on rare earths, thoughts, projections. Anyone want to tackle that? Do we have an appetite for rare earths? Courtney?
Yeah, sure. I mean, it kind of follows lithium a bit, so we think that as lithium starts to pick up again, we'll probably see a pick back up in rare earths. But last year we saw a lot of raises in the rare earth space, probably going to be down a bit this year. But yeah, as lithium starts to turn, which we believe it is starting to bottom out a bit, then we might see some more action there.
Okay, a question for you, Ed. Given the trouble that we're seeing in the nickel sector, do you think there's a role for government, and what sort of support would you expect from, say, the federal and state government?
Oh, that's an interesting question. Well, I mentioned the uncertainty earlier. I think that needs to wash through first. We need to find out what the government are talking to BHP about, if anything. And I know there's the opposition members for federal and state are coming over, and AMEC have invited us along to meet them as well. There definitely is a role, but as I said, and I'm probably a bit contrarian in this, for me it's not about price. There's two elements to the revenue side. One is the commodity price, one is the quality of the product you're producing. And one of the reasons Kambalda's run for 60 years, near enough, is that it was always high grade. So yes, I think there is a role to play, but it's a cautious one, and it's difficult with a 3-year electoral cycle to keep the politics out of those kind of discussions.
Okay, and probably last question. I remember the AFR used to run a survey each year, used to get the 10 major bank economists and used to say at the start of the year, where's the Australian dollar going to be in 12 months' time? And it took 10 years for those 10 economists to even get the direction right, let alone the pricing. So I guess just keeping it very broad, just going through the panel before we finish up, where do you think the economy's heading? Do you think we'll get through this year without a recession and things will be stronger or softer? What do you think, Andrew?
Well, my view is you've got very low unemployment, so there's lots of money flowing through the economy and it's going to feed on itself. And if you look, global economies always grow at 3% every year for as long as we can look at it. So.
A bull. Excellent. Ed?
Yeah, I agree. Look, things are never as bad as people make out, and when they're good, they're never as good as people make out. So I think it will be a solid sideways year.
Agree, yeah. We think that we've avoided the hard landing, so expecting rate cuts to start flowing through this year, and so yeah, we think it's going to be a lot better in the back half.
Brilliant. So 3 optimists, which is fantastic, and that's why we're in the mining sector. Someone asked me once when I was in a pub, and they said, "Liam, what do you do for a living?" And I said, "I'm a seller of hope." And I think all of us in the mining industry need to be sellers of hope, and turns out there's a good market for it. You know. So, ladies and gentlemen, please put your hands together for the panel. And I'll pass it back to Tim.
Thank you very much, Liam. 340 push-ups you owe us after that. I was keeping a tally. Thank you, Liam. Thank you, panel, as well. But for a more official vote of thanks, Nat Taylor is going to come back to the stage. Thanks, Nat.
Thanks, Tim. And thank you, panel, for the interesting conversation. So a few highlights: global shift towards nuclear renewable source. Australia's biggest resource of uranium in the world, and IPO, you look for asset quality, high quality management team and jurisdiction. And new commodities, uranium, gold, nickel, will fight it out. And lithium may rebound, but I think I'll go back to Liam's earlier quote with Taylor Swift, just shake it off. Thanks, panel.